Good day guys, welcome to today's class. If this is your first time on this channel, please hit the red subscription button so that when we drop more videos, you will get notified. So as you can see on the board, in today's class we'll be treating marginal and absorption costing. So the question goes that, what do you mean by marginal costing? What do you mean by absorption costing? First of all, you need to know that marginal costing is also called variable costing. Yes, so marginal costing, you can also call it variable costing. Now, the assumption with marginal costing is that marginal costing assumes that the most important cost we can ever incur in production process is the variable cost, and that is true to some extent. That the most important cost that we are dealing with under marginal costing is the variable cost of production. And now let me explain, giving an analogy. Now let's say I have rent of $10,000 per year. So I have variable costs. Now let me explain. Let's say my variable cost per each product I'm producing, let's say it's 100 naira per $100 rather per unit. Now let me explain what we mean by a variable cost. Variable costs are costs that changes with the level of output. Yes, what do I mean by cost that changes the level of output? Consider yourself running a big organization, and at some point you want to increase the number of outputs you are producing. You are producing 10,000 outputs before, but you decide that, okay, well, my demand has increased, I need to produce 30,000 units. One of the things you will spend more money on is the cost of petrol. The amount you spend on petrol, yes, that's going to increase over time, because when you are producing 10,000 units, then you want to increase it to 30,000 naira, you are going to need more time with your machines and all of that. So variable costs are costs that changes the level of output. If you want to increase your output, you spend more money on variable costs, and if you want to reduce your output, you spend lesser money on variable costs. Now that's by the way. Now moving on to rent. Rent is just something you incur once in a year money you pay yearly, $10,000. But you need to understand that if you don't have your variable cost, production cannot take place. Yes, even if I'm able to pay this rent, and I do not have enough money to get the necessities or the things that are necessary for me to produce my goods, then production cannot take place. So under marginal costing, we assume that the variable cost is the most important kind of cost we are dealing with, so we prioritize variable costs. While under absorption costing, we are not discriminating. Both variable costs and fixed costs, we treat them equal. Yeah, so fixed cost is just the opposite of variable costs. Fixed costs are costs that does not change the level of output, and a good example is rent. Yeah, if you spend money of rent, whether you are producing 10,000 units, whether you are producing 1,000 units, whether you are not even producing at all, it doesn't affect your rent. So a good example of a fixed cost is the rent, while the variable cost is a good example is petrol. So under absorption costing, we don't prioritize, we don't discriminate. Both variable costs and fixed costs, we treat them as being equal. But under marginal costing, we give high regards to variable costs. And you need to understand the difference between this absorption costing and marginal costing. Both are ways by which a companies can estimate their profit. They can calculate their profit. Yes, if you engage in production, and you can use marginal costing to estimate your profit made using the marginal costing. Using absorption costing, the same thing, but the absorption costing is the most popular one. Yes, when I show you guys the format, you know that it's a very popular one. But the marginal costing is less popular, and the reason being that marginal costing is used for a short period. It's used to make decisions, a short while decisions. Yeah, marginal costing decision whereby maybe I want to buy, should I buy this, or I should produce, should I sell, or I should buy. So all those decisions is what we use marginal costing for. But absorption costing follows the normal ways we do our manufacturing accounts in financial accounting. So let's enough of the talk. Let me show you guys the format, and let's see how it is done. Now we have marginal costing, we have absorption costing, by the way. So I will do it simultaneously, and I hope you guys follow me and get it. But before I even start writing the format and anything, you guys need to understand something we call contribution under marginal costing. Now what do you mean by contribution? Contribution is simply your sales value minus your sales minus variable cost per unit. Yes, so your contribution is equals to your sales minus variable cost per unit. That means that if my variable cost of producing a particular unit is 100 naira and I'm selling the product, I'm selling whatever I'm producing, I'm selling it 700 naira. So my 700 naira, which is my sales value, minus my variable cost I spent on that goods, will give me my contribution. So I demystify this concept of contribution, variable cost, and all of that in my video under CVP analysis, cost volume profit analysis. So I'll drop the link under this video. You can watch more on it and see what contribution is all about. Absorption costing and marginal costing. So of course, you know, if you want to estimate your profit is simply your sales value minus all the costs you incurred, isn't it? That's your cost. Now, so under marginal costing, we have our sales. Under absorption costing also, we have our sales. So let me do something like this. So now we have our sales. The next thing we are going to do is that, don't forget I say under absorption costing, you know, anytime you produce, you make production, there are something we call production costs. Yes, production costs are like costs you incurred in the process of producing that goods, and we have example of them like direct money you spend on laborers, direct labor, direct materials, indirect labor, indirect materials, and so on. So you need to subtract, to get your profit, you need to subtract your cost of production from your absorption costing, from your sales value. Yes, so let's go. We less under absorption costing, we less our cost of production. Let's say we have direct materials. So we have our direct labor also. Oh no, let's say indirect labor. So the total will give us this. Now, sales value, our cost of production, the cost we incurred in the process of producing the goods. So we have them to be direct materials, indirect labor. Don't forget that I said under absorption costing, we are not giving regards to variable or fixed costs. We treat all of them equal. Now, under marginal costing, what you need to get, or what you want to get, is your contribution. And what is your contribution? Well, your contribution is simply sales value, your sales value minus your variable cost of production. Now, if you look at this place now, at this point, I have indirect labor. So I decided to change it to fixed production costs in order to make it easier to comprehend. So we have our sales value less our direct materials, our fixed production costs. So the cost I incurred in producing these goods is direct materials and my fixed production cost. Now, coming under marginal costing, under absorption costing, we less our direct materials and our fixed production cost. But under marginal costing, we are not going to include our fixed production cost. What we are concerned about, don't forget I said that under marginal costing, what we are concerned about is our variable cost of production. So from our question here, our variable cost of production is just the direct materials. So, and that's what I'm going to bring here. Less direct materials. So we have that here. I'm not going to take my fixed production cost. So here I'm going to take only my variable production cost. So after that, well, sometimes you might have closing stock. You know, it's not all the goods you produce yourself. Yes, I produce 10,000 units of goods, and in the end I'm only selling 9,000. Yes, that's my closing stock. And don't forget that before you can get your cost of goods sold, you have to subtract your closing stock from your financial accounting knowledge. You should know that. And before you can get your cost of goods sold, you subtract your closing stock. Then when you get your cost of goods sold after subtracting your closing stock, you subtract it from your sales value. So here we are just going to, from here also, we are going to less our closing stock, which will give us our cost of goods sold. So closing stock, we subtract it. Then when we subtract our closing stock, we are going to get our cost of goods sold, which is going to give us our gross profit. So your sales value minus your cost of sales, this we calculated here is the cost of sales. Your sales value minus your cost of sales we give you your gross profit. So you have your gross profit. So as you've gotten your gross profit, you already know that the next thing to do after getting your gross profit is to subtract your selling expenses, distribution expenses, and whatever to get your net profit. So you just come straight away. You said let's say selling expenses, or let's say variable, sorry, let me put it as variable selling expenses. Variable selling expenses. So I have it, and our fixed selling expenses. So our variable selling expenses, our fixed selling expenses, then I add them together, subtract them from my gross profit to get my net income or my net profit. So you can say that the absorption costing is related to whatever you've learned in financial accounting. But under marginal costing, that is where you need to pay attention. That is where you need to do some exclusive job. And don't forget that you are not going to include your fixed cost of production. So if from here I'm going to less my closing stock, less closing stock, permit me to use CS. So closing stock, if I less my closing stock, I'm going to get my variable cost of production, because here after lessing my closing stock I get my cost of production, which include fixed and variable. But yet after lessing my cost of production from just my direct materials, from just my variable cost, I'm going to get my variable cost of production. So my variable cost of production subtracted from my sales value, sorry, I less my closing stock, then I'm going to get my variable cost of production. So my variable cost of production, yes, I can subtract it from my sales value so that we get my gross profit. Or you see variable gross profit. Variable gross profit. Now, the reason I did not call this my contribution straight away is very simple, because I said your contribution is simply your sales value minus all your variable cost of production. But this, if you look at it, is just my sales value minus not all. This direct material is not all my variable costs that I incurred, because if you look at what I wrote here, I also have variable selling expenses. So adding being my variable selling expenses is also here, I will have said this is my contribution. But because I've not subtracted all the variable cost of production, I can't call this my contribution. And I cannot include my selling expenses is not part of my production cost. I cannot bring it here. So you need to understand that there are some expenses that are production costs. You treat them as production costs. Then after treating them as production costs, you get your gross profit. And there are some expenses that you treat them as, selling expenses, distribution expenses, and whatever. You treat them as that. So I cannot bring my variable selling expenses, I cannot bring it here or treat it as my cost of production. No. So after getting my variable gross profit, I'm going to less my remaining variable selling expenses. So less variable selling expenses. So my variable selling expenses, let's say this is it. So if I less that, now I've subtracted all my variable cost of production, then whatever I'm getting is now my contribution. Whatever I'm getting is my contribution. So after getting my contribution, the next thing I'm going to do to calculate my profit, of course, you know that after getting your contribution, to get your profit, just subtract your fixed cost from your contribution. So coming back to my question, I have two fixed costs, fixed production costs, and I have fixed selling expenses, which is this. So I'm going to subtract them. So fixed production costs, and fixed selling expenses. So if I subtract these two from my contribution, then I'm going to get my net profit or net income. So like I said earlier, this is the format we follow for marginal costing, and this is the format we follow for absorption costing. And in most cases, you will not always get the same net profit, and the reason being that the valuation of our closing stock. Yes, when we take an example question, you will see it clearly. in the valuation of our closing stock, it always makes our net profit in marginal costing and our net profit in absorption costing to not be the same in most cases. So we take a good question and we see. And in our subsequent class also, I'm going to be explaining how we make decisions using marginal costing. We make decisions because yes, not only something like this you always come across in marginal costing, you come across decision questions also. So let's take a question. So welcome back, guys. We have the question. Green Limited furnishes the following details for the year ended 31st December 1992, preparing the income statement of the year. So we have sales 1000 units at 10 naira per unit. We have manufacturing costs 2200. We have the variable manufacturing costs 1100 units at 6 naira per unit. We have the inventory at close, that's our closing stock, 100 units. We have our fixed selling expense, selling and administration expenses, 500, and we have our variable selling and administration expenses, 400. Yes, there are some things I want you guys to take note of before we proceed to solve this question. And the first one there is that if you look at it, they said we sold 1000 units, but in the end we are having 1001. Sorry, in the end we have 100 closing stock. Please, let's analyze before we solve. We sold, sales is 1000 units and we have our closing stock of 100 units. So if I should ask you how many units do we produce, that means we produce 1100 units. So when we produce 1100 units, we're only able to sell 1000 units. So the remaining 100 units is our closing stock. But don't forget that. Okay, let's solve before I just start to analyze. Let's solve. Now we have marginal costing, and we have absorption. So let's prorate. Now from the question we have sales 1000 units at 10 naira per unit. So under our marginal costing we have sales. Now our sales in value, our sales is 1000 units at 10 naira per unit. So 1000 times 10 will give you your sales value. So 1000 times 10 is 10,000 naira. 10,000 naira under marginal costing. Under absorption costing, our sales is also 10,000 naira. So from the question also, don't forget that under marginal costing we are going to take all our cost of production, whether fixed or variable, while under marginal costing we are going to take only our variable cost of production. So if you look at it, we have manufacturing costs 2200 and we have variable manufacturing costs 1100 units at 6 naira per unit. Now take note, the manufacturing cost there in the question is a fixed manufacturing cost. So we have the variable manufacturing cost. Of course, under absorption costing we consider the two. So we have manufacturing cost less manufacturing cost less manufacturing cost, which is 2200, and we have variable manufacturing cost. So we have our variable manufacturing cost, which is also 1100 at 6 naira per unit. So 1100, our variable manufacturing cost is 1100. Yes, because our variable manufacturing cost is 6 naira. So but how many do we produce? We produce 1100 units. So 1100 times 6 naira, that will give us 6600. So our variable manufacturing cost is 6600. So while for marginal costing, the only thing we need to consider is our variable manufacturing cost. We are not concerned about the fixed manufacturing cost for now. So now we come here, we say less variable manufacturing cost. The variable manufacturing cost, please permit me to do it that way. Variable manufacturing cost is 6600. 6600. That's our variable manufacturing cost. So on this side, if you add these two costs together, we have 8000 Yes, 8,800. Now we have 8,800 for this is our cost of producing 1,100 units. Yes, this is the cost of producing 1,100 units is 8,800. But we only sold, don't forget that we only sold 1,000, and this is the cost of 1,100. So but we only sold 1,000 units. So we have a closing stock of 100 naira. Yes, a closing stock of 100 units rather. Now, how are you going to get the value of your closing stock? Closing stock. If it takes 8,800 to produce 1,100 units, so how many does it take to produce 100 units? So don't forget I told you guys that it is in the valuation of closing stock that we make absorption costing and marginal costing to be different in their profits. So now, how am I going to get my closing stock? Because if you look at the question, they said that our closing stock, inventory at close, is 100 units. No price was attached. We are going to be the one to get the price. Now, and how are we going to get that? Now, this is how I'm going to do it. I'm going to do it for marginal costing, and I'm going to do it for absorption costing also. Now, for absorption costing, for us to produce 1,100 units, because that is the total unit we produce. For us to produce 1,100 units, we spent, how much is our costs? We spent 8,800. So to produce 1,100 units, we spent 8,800 to produce it. So the remaining left 100 units, how much does it take to produce it? So this will be your the value of your closing stock. So it's very simple. 1,100 units, it takes 8,800 to produce it. Then how much does it take to produce 100 units? So you solve 1,100 multiplied by x. So 8,800 multiplied by 100, you have 880,000. So you have 880,000 equals to 1,100 times x. That's 1,100 x. Then you divide both side by 1,100, divide both side by 1,100. So if you divide both side by that, divide by 1,100, you will get your closing stock to be 800. So your x, which is your closing stock, is 800. That means that it takes 800 to produce 100 units for absorption costing, and this is the value of our closing stock. So you do the same thing for marginal costing. You will say if it takes 6,600 variable cost to produce 1,100 units, 6,600 variable cost to produce 1,100 units, then how much does it take to produce, how much variable cost does it take to produce 100 units? So you do the same thing, you cross multiply. So you have 1,100 times x, that's 1,100 x equals to 6,600 multiplied by 100. 6,600 multiplied by 100, that would be 660,000. So 660,000. So you divide both side by 1,100, divide both side by 1,100. So if you divide both side by that, divided by 1,100, that will give you 600. So the value of our closing stock under marginal costing is 600, and the value of our closing stock under absorption costing is 800. So it is in the approach to closing stock that we make us get different profits. So we come here, we less our closing stock. Don't forget that your closing stock, which is 800. So if you less your closing stock, you get your cost of goods produced, cost of production. So 8,800 minus 800, that will give you 8,000 as your cost of production, cost of producing 1,000 units. So 10,000 minus 8,000 will give you 2,000 as your gross profit. So you come under marginal costing. Your closing stock is 600. So closing stock 600. Then you have 6,600 minus 600. You have 6,000. So 6,600 minus 600, you have 6,000. Then 10,000 minus 6,000, you have 4,000. Don't forget that this is not your contribution yet, because you've not subtracted all the variable cost of production. So this is just your variable gross profit. So the next thing we need to do here to get our net profit is very simple. Since we've gotten our gross profit, we just subtract our non-production costs from our gross profit, and we get our fixed costs. Fixed net profit rather. Now, so our gross profit, if you look at the question, we have fixed and selling expenses and variable and admin expenses. All these two costs are not production costs, so they are selling expenses. We subtract them from our gross profit to get our net profit. So now we come here, we say fixed 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 selling and admin expenses. Admin expenses, we have it to be 500, and we have our variable selling expenses, permit me to use it this way, we have that one to be 400. So we add the two together, it will give you 900. So 900 from 2000, you have a profit of 1100, profit of 1100. So let's go to marginal costing and say, now under marginal costing, for us to get our contribution, we need to subtract our the remaining variable cost from this variable gross profit. So if you look at the question, the remaining variable cost that we have is our variable selling and admin expenses. So you bring it, variable selling and admin expenses, which is how much? Which is 400 naira. So 4000 naira minus 400 naira, you will get 3600. So I told you that the moment you subtract all your variable costs from your selling price or from your sales value, that is your contribution. So this 36 is your contribution. So to get profits from this point is very easy. What are you going to do? Subtract your fixed cost from your contribution to get your profit. So our fixed cost from our question, we have just two. So the first fixed cost, that is the first production fixed cost, which is the manufacturing cost, 2200. So we have manufacturing cost, which is the fixed 2200, and we have the fixed selling and admin expenses, which is 500. So if you add these two up, you get 2700. So 22 plus 500. So 36 subtracted from 2700, 36 minus 2700, that'll give you a 900 naira profit, a 900 naira as your profit. So this brings us to the end of the introductory class to absorption and marginal costing. So this is not all under this topic. In my next class, I'm going to take a well-detailed question of something you see in your exam hall here, because in the exam hall you see tedious question more than this. This one is very simple. So in our next class, we take questions like that and we move to our next topic. Please don't forget to share this video to your friends and subscribe, so that when we drop more videos, you'll get notified. Thank you. See you in our next video class.